Look, it is the question for anyone who's new to gold or even been in gold for a while. Should I buy at these levels? I even have clients who've had for years. Should I buy at these levels? I see dollar cost averaging in, and I just wrote an article that I published today. Is it too late for gold? Have you missed your window? It's an absolutely fair question. And of course, you're going to say, well, Matt's an executive at Zurich. He's going to say, of course, it's not too late. Buy as much gold as you want. And that is my answer. But let me give some reasons why, so I'm not just pitching my book or selling my widget, because it's a fair, and you should be skeptical. But you should also look at the facts and then make your own opinions. First, as you said, gold's at nominal all-time highs this year, but in inflation adjusted, it isn't. We'd still have to go up many percentage points to reach the 1980 levels. And measured against the broad money supply, gold's about as cheap now as it was in the 70s. That's just a fact. So you could argue on a technical basis that gold is still a good price in the 3,000, the 3,300, 3,400, 3,500. That seems hard to believe. I remember having this conversation with gold at 2,600. I've missed my window. I remember with 19, because it wasn't that long ago, gold was at 1,600. And I'm not saying that gold just goes straight up. It could have some severe pullbacks, and you could wait for those. And so the other answer to that question is, and you just answered for yourself, is what's your time horizon? Because if your time horizon is 10, 20 years, as opposed to the next fiscal quarter or year end, and that's why a lot of family offices are afraid, because the CIOs or bankers or ex-bankers, their performance is measured, their salary is measured by their overall return. If gold pulls them down, they're thinking 1 quarter, 1 fiscal year. If you're actually being a fiduciary, you don't want all your boxes and allocations to be green. That means you're doing something wrong. But if you're thinking 10, 15, 20 years out, whether you bought gold at 3,300, 2,900, or even 1,800 is going to be immaterial. My target, like Ronnie Sturflis for the next couple of years, is 4,800. But I think it's going, and again, I'm not saying this to just throw it out there. We're going to revalue gold. It's going to be part of the new reset, whenever and however that involves. It's certainly replacing the 10-year. We're looking at gold at 10,000 conservatively, not next week, not even next year. Could be, but I have no idea how to predict that. But if I'm looking 10, 20 years out, it's going to be much, much higher than it is today. And whether you bought it 33 and change or 36 and change will be irrelevant in the long run if you're thinking that way. If you're trying to trade commodities or trade futures or trade precious metals, like any hard asset, you better have your stop losses in place. You better be looking at your Bollinger Bands, your Keltner Bands, and all that. If you're purely a speculator, that's a very different question. And I'm not the right person to ask. I've seen many commodity traders fail miserably at trying to time short or long hard assets. Again, if gold does go to 4,800, then to 6,200, then to 10,000, again, that doesn't mean that you're doing, the world is doing well. That doesn't mean that you're being richer, but that just means that the cost of a car tire or a house or a new mattress is going to be significantly higher. You can also certainly get price appreciation, but as Egon says so many times, it'll be a sad day when gold's at 10,000, but thank God I'm in it. And again, I use Egon as an example. He had made a lot of money as the chairman of a FTSE 100 company. He could have done anything he wanted with it. He could have invested in any asset class. He bought gold at 300, not because he was trying to get rich when gold went to 3,500. This was 20 years ago or 25 years ago. He was just thinking, whatever money I made, whatever money I'm going to earn, it's going to be in a paper asset. It's going to be in a fiat currency, whether it's a Swiss franc or a euro at the time, or at that time, even before, a Deutschmark or whatever. But he wasn't thinking, how can I get rich on the money I have and get richer? He was thinking, how do I preserve my wealth? And that sounds very boring. So he just bought gold at 300, a lot of gold at 300. Now, of course, when gold goes from 300 to 3,500, he's extremely happy with the price appreciation. He actually got richer. But more importantly, he didn't get poorer. And that's kind of the model we look at. Yes, he got much richer by investing in gold. But that was never his motive. But you will get richer with gold over the next 20 years, even at these price points, is my short answer. I guess I say think like Egon. And he's been an immense mentor to me because I'm thinking 20 years out. And I'm thinking of my grandkids and my retirement, so to speak, or whatever. I don't really need to be worried about polo ponies when I'm 75 or a new car. I don't really have the desire to get richer, but I could get richer on gold. But more importantly, I know I won't get poorer. And I'm saying that, again, Egon was all about wealth preservation, but yes, he also benefited from massive price appreciation and massive returns. And I think you can get both. And it's a long way of saying if your window is reasonable, respectable, and if you have conviction, because not once did Egon sell his gold when it was ripping into the 80s and then going down and these highs and lows, just stuck to gold because he had the conviction that eventually paper money would do what it always does and go back to its intrinsic value, which is effectively zero. Now, I'll repeat, when measured against a milligram of gold, the US dollar has lost 99.1% of its purchasing power since 1971, when we went off the gold standard. That's a simplistic but very important percentage. You can look at it in different ways. But what Egon understood and what our clients understood, and a lot of your viewers understand, it's not that gold is rising over the next 10 years or the last 5 years, because gold has gotten more important in terms of its use or in terms of its shine. It's rising because debt markets and hence currency markets have gotten so pathetically embarrassing and so unsustainable and so discredited that gold is doing what it's been doing for thousands of years, getting the last laugh on failed policies from modern monetary theory and the fantasy you can solve a debt crisis with more debt and monetize that debt with mouse click money. These a 10-year-old should understand are fantasies, temporary prosperity leading to where we started, currency debasement and war. And we're in that currency debasement moment right now. It's not even predicting, it's happening right now. Regardless of the DXY, which is getting beaten, but regardless of the relative strength, the inherent strength, the absolute strength of your paper money, it's just losing value every day. And so, again, if you're 10, 20 years out, I wouldn't worry, Jesse, whether you buy 33, 36, or 31. And I'm not telling you where the price is going to be next week because I don't know. No one does. I just know secularly it's going to go north because paper money has consistently gone south, regardless of the relative strengths of currencies. I'd much rather have a dollar or a Swiss franc than a peso. I would. But again, all of us need to protect against the obvious now decline in fiat money. And that's been our message for decades. It's still our message now. But I think Egon's example is telling. It's not a lucky break. It was a thought out conviction that will be just as true for people who buy today for the next 20 years as it was for him 20 years ago. I really believe that.
And your thoughts on the silver market at present?
Oh, yeah. Silver is important too, of course. We should never forget silver. I don't talk enough about silver. Look, this is actually an indication of the gold price too. And this is my thought on silver. I mean, the gold silver ratio is hovering 100 to 1, crazy. And you think we're having this gold bull market, and yet silver, it's made moves, positive, but not the dramatic moves where it really outperforms gold, which is confirmation of a gold bull market. And we've seen that throughout history. And we're not seeing it now, so that would make people think, has silver gotten less appealing? My answer to that is we're not in the gold bull market yet, even though we've seen these all-time highs. Silver's lagging because gold hasn't really begun its bull market rip. I really believe that. I'm not here to predict, there are people on TV or on certain shows calling $600, $700, $800 silver. I don't know, or even $5,000 silver, $4,000 silver. That's a mug's game again. I know at 35, 36, or 37, it's going to be much, much higher than that in the years to come. So it's just a great high-class problem to wonder, will it be 50 next year? Will it be 60, 70? But I think the gold-silver ratio, we're not seeing the kind of the ratios we saw in 1980 or 2011 at 15 and 32. We'll see it again, and I don't know when. What I think the silver quote-unquote lag, although it's certainly higher than it was 5 years ago, but I'm saying that the lag in silver right now is because we haven't really seen the bull market yet in gold. I don't think we have, and yet it's done extremely well this year. It's the highest performing asset. But I think this is just chapter 1 of the gold story. I really do. And Egon, you could argue at $300 was chapter 1. And but I think for the next 20 years, we're going to look back at $3,000 gold and say, what a bargain. Sadly. And yet, even if there is a reset or a Bretton Woods 2.0 or a Plaza Accord 2.0, and we somehow magically get cooperation in a beautiful mind John Nash way with the BRICS and the G20 and everywhere else, even if we get that, whatever new system to come, and even the IMF has said this, despite its central bank digital currency programmability and trackability nightmare, for anything to have credibility in this new reset, they've said it, the BIS has said it, the IMF has said it, the World Bank has said it, for it to have credibility as opposed to just another new electronic fiat, it has to be covered in some significant ratio with a hard asset like gold. And so gold will be, again, playing a part of the new system to come. However smooth, ugly, discredited, or crazy, or whatever pain we have to go to get to that point, that reset is coming, and that new money is coming. And that new money doesn't mean a gold-backed dollar or a gold-backed euro, but it's going to be a gold-covered central bank digital currency Will it be next year, next week? I don't know. But they're already moving in that direction so rapidly if you follow the puck. Again, it goes from gold no longer just being an allocation or a debate about low inflation, high inflation, low rates, high rates, strong dollar, weak dollar. It's broken from all those correlations. Now gold is simply becoming a strategic reserve asset for the new system. And that's, I think, not spoken of enough. And that is not pie in the sky. That is not sensational. That's actually happening. So yeah, silver is, I think, lagging only because gold hasn't even begun to rip yet. And I think silver right now at these prices, if you are patient, as Rick Rule said, silver rewards infrequently but extravagantly. Some people say it hasn't done enough for them. If you bought silver at 22, you should be content at 36, but you'll be very happy when it goes into triple digits. And silver is that little speedboat that rips past the juggernaut of gold. It's also more volatile too, so you got to pick your window. What's your exit? What's your entry? I'm going to buy silver so that when it rips, I'll sell it at a certain point. I'll never catch the high top. No one does. And then I'll use that to buy more gold. Hopefully, when gold is lagging silver in the growth space, but that's what most clients do. Silver is to speculate when the situation's right. If you're patient, it will reward you extravagantly. Sell, buy more gold.
Matthew, this has been a fantastic conversation. Really appreciate you coming back on the show. Tell us about Von Greyerz, where people can find that, and anywhere else you'd like to direct people online. Feel free.
Yeah, we have our website at vongreyerz.gold. It's also goldswitzerland.com, our old URL before we changed the name to Von Greyerz from Matterhorn Asset Management. Our website has all the articles and interviews we do. It has a lot of free education on not just why gold, but how to own gold. We have a Von Greyerz Substack now. Again, you can see interviews like this and any articles that Egon or myself write, Ronnie Sturfula, etc., and our advisors. It's all there, and you don't have to become a client. We are all about wealth preservation. We have the safest vault in the world. We have direct relations with refiners. We can give instant liquidity in any currency, but we hold gold and silver in some of the best, certainly the best vault in the world in Switzerland and also in Singapore. So we're there to help you with all the onboarding, bringing in, whether you have existing gold, you need to buy gold. If you need us to transport it anywhere in the world, we can do it. And if you need liquidity in fiat money, we save in gold and spend in fiat. We all do. And so there are times where there's a wedding, a house purchase or something, you need some liquidity. We'll provide that liquidity very easily with our relation with the refiners. So it's a very good high net worth service for high minimums, sadly, but the education we offer appeals to whether you're buying your first ounce tomorrow or whether you're buying 50 million worth of gold with us. It's the same thesis, it's the same knowledge. Egon and I are happy to talk to anyone who's interested in gold, whether they become a client or not. That's why we do these interviews. I personally am more interested in getting the middle class to protect themselves than just the high net worths that we represent, although that's fantastically rewarding. Anyone and everyone should understand why you should at least consider precious metals, especially in this current economic backdrop.